Okay, so I've got a question on Twitter today from Andy, and Andy was asking about spotting reverse signals for a trade when you've got it open to look for the ideal exit. It's a fairly common question. Obviously, opening the trade's one situation to deal with, closing it's another. If you don't close the trade at the right points, then obviously you can be selling yourself short, not letting your profits run. And alternatively, if the situation changes and it dives back on you, you find yourself in a potential loss when you could have had some profit out of that situation. So, in answer to that, it's a bit of a tricky one. As I've said in previous videos before, exiting a trade because you're on X amount of profit is absolutely the wrong idea. You should only ever be exiting a trade because the market has changed, or the situation has changed, or whatever the reasons you open the trade for are not being they're not being fulfilled and the criteria is not being met. So the first thing to focus on, I think, which is a very common problem for so many people, is looking at the bigger picture. Now, obviously, when you open a trade, there's money on the line. It becomes that little bit more serious. Depending on the size of the stake, the whole anxiety levels come up a little bit, and you need to learn to get that under wraps, really. But what I would say, starting out and particularly earlier on, is just don't use the larger stakes to avoid that kind of pressure coming and to avoid them sort of mistakes seeping in, because it's often not to do with the market, it's to do with ourselves and how we execute the trade when the cracks start to appear. So keep an eye on the bigger picture. When I say the bigger picture, I mean all the horses within the race, if you're trading the race, for example. And the best thing to put it into context really is to say, if you were trading a horse, for example, and the price is steaming in, and you've backed the horse and the trade's open, if there then comes a point before the start where maybe one or two other horses within the race are actually starting to be significantly supported as well, then you have to bear that in mind, because you might be completely right that the horse you're trading is definitely coming in, it's definitely being supported, but if the situation changes and other horses within the race start being supported as well, you can't expect that to carry on with the same sort of level of momentum, as it were, within the markets and carry on, because it is going to put the dampers on your trade. So keeping an eye on a bigger picture is a big issue, and it is something where everyone seems to go wrong as well. And I do seem to think that is because you tie yourself emotionally to the trade, as it were. You open the trade and you find yourself just zooming in, and the only thing you're really looking at is that one ladder. You've got the trade open, you're looking at that profit and loss column and the price just bouncing up and down, but that is not giving you a lot of information. And what we need to execute trades again and again successfully is more and more information to take on board. So you need to sit back, almost sit on your hands, as it were, particularly if it's a longer term trade, and look at the rest of the market. Has the situation changed? You know, if the price is coming in, are the others then being supported? You know, has something changed? If it has, then you need to start thinking about exiting, or even some kind of exit strategy, or even offsetting your position so that, you know, if the price does rip back, you don't find yourself in the red. And that's really, really important, crucial thing to bear in mind. And like I say, that depending on the size of the stakes, it depends on the anxiety levels, as it were. It depends on the amount you feel like you have to zoom in on that. You know, being a human being, focus on the one thing that's important to you there. Because quite frankly, it's just going to screw you over. Because if you don't see what's happening elsewhere in the bigger picture, and you're just focusing on that profit and loss, it's not going to change the situation. At the end of the day, the market does exactly what it wants. It doesn't care what you think, it doesn't care how you feel about it, it doesn't care about anyone. It just does what it does. You know, it just reacts per what's happening within the market. So if you're missing half the picture, you know, you can't expect to come out on top. So that's the key thing I'd say, really, is possibly lower your stakes to sort of bring down the anxiety a little bit if you're having trouble with that and you're focusing on the one runner, and sit back and force yourself to actually look at the bigger picture within the markets. And that's probably the key to actually spotting the right points to exit within the trade. So I was just thinking about this when I was trading the markets this afternoon, and you can see I've opened the trade there at 305 and I've exited a chunk of it at 3.1. Now what that's done is that's managed to offset my position within the market, which has lowered that kind of anxious feeling around having a trade open. Just looking the horses down at the start there, just to check that there's nothing strange going on that's going to change my position within the market either. But because of the lower stakes, you can see that I actually feel considerably less anxious, and one of them's just been filled there at 3.4. and the rest just gets taken out shortly after. But there's no need to exit that trade a couple of ticks early, and it's allowed me that little bit extra profit, and it is a small amount in this case. In the markets there, but by not having that feeling, the chances are that actually it was a lot more productive.